Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. Uncle Frank lives for this kind of material, so let's get started. Regulators want to better prepare funds for margin calls. FSB proposes measures for non-banks, including hedge funds. Recommends stress tests for extreme but plausible scenarios. From the article, global regulators proposed a package of measures to ensure hedge funds and other investors from outside the banking sector are better able to cope with margin and collateral calls in times of market stress. The Financial Stability Board published draft recommendations on Wednesday for improving the liquidity preparedness of such participants in centrally and non-centrally cleared derivatives and securities markets, including repos. The focus on risk management and governance, stress testing, and collateral. And another one from Bloomberg. Some hedge funds too big to fail for bond market, IMF says. Funds may be systemically important to Treasury and repo market. Positions in basis trade are still large after recent unwind. A small group of funds has accumulated such large short wagers in the Treasury market that they could destabilize the broader financial system during times of stress, according to the IMF. And then from Reuters, Fed's reserve repo facility plummets to lowest level in nearly 3 years. A key Federal Reserve facility that takes in cash from money market funds and others saw inflows drop sharply on Monday. One wrong move and these guys are toast, people. Watch how fast politicians and prime banks and brokers turn on these clowns if this shit goes sideways. So what are the hedgies thinking? What are they doing right now? From Reuters, hedge flow. Hedge funds turned bearish in April, Goldman says. Hedge funds globally have turned the most bearish they've been on equities this year, a Goldman Sachs note said, as sticky inflation and renewed geopolitical concern have dragged stock markets lower. Then from Kitco, hedge funds see gold as overvalued, Bank of America's fund manager survey. And then hedge funds turned the most bearish on stocks this year, plus why oil isn't surging on the latest Middle East tensions. Now, in my previous video, I told you they were piling into oil stocks, but now that's changing. Hedge funds dump U.S. energy stocks to buy crude options. That's because the Iran conflict didn't give them the move they wanted, so now they're moving over to crude. And from Insider Monkey on Friday, 12 most shorted stocks in 2024. But that's not what I want to talk about. Also in that article, short selling activity touching new highs in 2024. The latest data from Goldman Sachs shows that short selling activity recently reached its highest level in 6 months. Short sellers are targeting stocks from the telecom and media sectors. Goldman Sachs said stocks from the TMT sector account for a whopping 29.1% of total U.S. single stock net exposure. Short sellers are getting emboldened amid the pessimistic mood on Wall Street these days as strong jobs data and sticky inflation keep crushing investors' hopes of rate cuts. You see, guys, when I know how the hedgies are positioning themselves, I obviously root for the other direction, mainly because I don't care how well AMC does at this stage in the game. I'm more focused on events that will grind the hedgies up and force them to cover short trades due to liquidity issues. So if I know they're bearish on equities, I'm hoping for good earnings reports and surprise lower inflation readings. If I know they're long oil, I'm hoping things de-escalate in the Middle East or in Asia and someone begins drilling again. If they're bearish on gold, it's my hope the US, India, and China go on a gold shopping spree. Before we go forward, let's wrap last week with Bloomberg's evening briefing. U.S. equities sold off sharply on Friday, sending tech stocks to their biggest weekly loss in 17 months. The S&P 500 closed down 0.9%, dropping for the third straight week and leaving it more than 5% below its closing high at the end of March. The Nasdaq 100, meanwhile, declined 2.1%, recording its deepest weekly drop since November of 2022. At the same time, the CBOE Volatility Index, the VIX, climbed close to 19. The market drop comes as the U.S. Fed Reserve pushes back rate cuts. Fear grows of a potential rate increase should inflation continue to stick, and the ramifications for oil prices amid further military escalation in the Middle East. Geopolitical and political uncertainty join inflation, rates, and the Fed in pressuring markets, said Mark Hackett, Chief of Investment Research at Nationwide. The combination is driving a rapid and dramatic shift in the complexion of markets and the attitude of investors. Since I know the Hedgies are bearish and unloading equities, I'm hoping for surprise good news, but this guy says I ain't gonna get it. No turning back. This Wall Street bear is predicting the biggest market crash since 1929. One of Wall Street's most bearish skeptics told Business Insider last month that he thinks the worst market crash since 1929 is coming. Mark Spitznagel, Chief Investment Officer of Universa Investments, is known for being a perma-bear when it comes to the stock market outlook. Spitznagel told Bloomberg in an earlier interview that we're witnessing the greatest credit bubble in human history. Fed's Goolsbee says progress on inflation has stalled. Makes sense to wait on interest rates. Guys, let's stop worrying about a rate cut because it's clear we're not getting one for a while. After you watch this video, you'll be amazed if this market can survive the rest of April, much less get a rate cut. But I have an event on the calendar on the next slide that will decide this matter in the short run. Okay, so we had the Bitcoin halving event. I don't have anything scheduled for Monday yet, but something tells me it's going to be hot, and crypto may take center stage. On Tuesday, the 23rd, S&P flash U.S. services and manufacturing PMI and new home sales. Wednesday, the 24th, durable goods orders. Thursday, the 25th, GDP Q1, that's big, initial jobless claims, and pending home sales. But let's face it, so far, it's all about Friday, April 26th. The PCE group of data drops, along with personal income and spending, consumer sentiment, and of course, it's options expiration Friday. Beyond that, we're going to be watching for the cicada apocalypse to begin. Then in May 8th, we have the preview of the new Planet of the Apes, and on Friday the 10th, that's the official release. I hope the apes make this the biggest box office success of the year. I know a lot of you feel like it doesn't matter, but trust me, when you're facing an uncertain future, it's always better with exploding top-line revenue. Now, also in May, on the 24th, I've got a CAT, or Consolidated Audit Trial event, and then on the 31st, we've got a live event. But guess what? Now I don't see the Go Live event on the website anymore. So what happened to the live event that was supposed to occur on May 31st? It's gone. Now there's nothing on the calendar until June 20th. So if any of you know more about this than I do, please add it to the comment section. Guys, I am rooting for this kind of stuff. I am. I just don't believe Gensler or anybody in the regulatory arm will do anything significant to hurt Wall Street during an election year. I hope that I'm wrong. Okay, so at the time of this recording, it appears the Israel-Iran thing is calming down, but I'm seeing horrible headlines streaming out of the China space. FBI chief warns Xi Jinping's CCP-linked Chinese hackers are planning to physically wreak havoc on U.S. infrastructure. Chinese hackers waiting for the right moment to attack U.S. infrastructure, FBI warns. And then China warned it's treading close to the line as latest move risks full-scale war with the U.S. China on brink of Taiwan invasion as NATO braces for World War III. China is on the warpath and is preparing to unleash a storm on Taiwan, a former top U.S. intelligence officer warned. The doomsday prediction comes from Mike Studman, a former commander of the Office of Naval Intelligence and Director for Intelligence of the Indo-Pacific Command. Are you starting to miss the mean tweets yet, lefties? Didn't see many headlines like these when Trump was in office, did you? Just the occasional, we blew the shit out of a terrorist this afternoon, right? I hope the Chinese aren't stupid enough to attack the U.S. infrastructure. If they do, I hope all Americans completely boycott every piece of shit made in China for good this time. The pieces are moving on the chessboard, people. China's holdings of U.S. Treasury bonds fell to $775 billion in February, a drop of $22.7 billion from a month earlier. That's the second decrease this year, according to data released by the U.S. Department of the Treasury on Wednesday. In February, China remained the second largest holder of U.S. government debt. However, China's holding of U.S. government debt has been below the $1 trillion mark since April of 2022. And from Insider, more than half of the U.S. Air Force's B-2 stealth bombers just staged a mass fly-off. Hey guys, let me be clear. I'm not rooting for war so we can all get paid on a trade, but I am gathering all of the economic and geopolitical data I can so we can be prepared for what's coming. I want everyone surprised by what happens next except my subscribers. I want them cooler than the other side of the pillow. From yesterday, photos show the bombers taking off from Whiteman Air Force Base. As I mentioned on the calendar slide, the Bitcoin network on Friday night slashed the incentives rewarded to miners in half for the fourth time in its history. The celebrated event, which takes place once every 4 years as mandated in the Bitcoin code, is designed to slow the issuance of Bitcoins, thereby creating a scarcity effect and allowing the cryptocurrency to maintain its digital gold-like quality. While the upcoming Bitcoin halving will create a supply shock as the previous ones had, we believe its impact on the cryptocurrency's price could be magnified by the concurrent demand shock created by the emergence of spot Bitcoin ETFs, said Benchmark's Mark Palmer. The bigger immediate impact will be to the miners themselves, he added. They're the ones that run the machines that do the work of recording new blocks of Bitcoin transactions and adding them to the global ledger, also known as the blockchain. On topic, let's segue to BRICS. BlackRock uses Bitcoin as inflation hedge as USD worries. Amid BRICS de-dollarization initiatives, BlackRock is the latest to use Bitcoin as an inflation hedge amid US dollar concerns. And then, BRICS to announce membership of new countries in 2024. The BRICS Alliance will announce the membership of new countries in the upcoming 2024 summit in October of this year. And then finally, 40 nations now seeking alliance entry in 2024. The BRICS economic bloc has seen 40 nations now seeking entry into the alliance in 2024, according to recent reports. I wonder how many of those 40 countries get annual support from the American taxpayer. Guys, we have to keep one eye on the distressed credit private equity firm Apollo that Adam Aron worked for 9 years. UBS sells $8 billion in assets to Apollo, renegotiating Credit Suisse deal. And from yesterday, Paramount jumps on report of Sony Pictures and Apollo discussing joint buyout bid. It would appear state financial officers put Bank of America on notice for allegedly debanking conservatives. Americans should never have to worry that their personal financial decisions will be weaponized against them, Kentucky State Auditor says. And then from Newsweek, Bank of America boycott calls grow after MAGA accounts closed. Forget MAGA. Do you guys still need another reason to boycott this shitty bank? The guys that shorted our 100-year-old American company so they could profit from the misery of the pandemic? Kenny's biggest lender? Kenny's prime broker? The guys that run some of Kenny's short trades, whether they have the stock or not? If you're an ape, I have no idea what you're doing banking with these assholes. Take a good look at the future, guys. Just a handful of huge banks that will punish you if you don't vote their way. Like I don't have enough shit to deal with over here? The cicadas are coming, and some may become flying salt shakers of death. This spring and summer, people in parts of the American Midwest and South will get to experience a numerically magnificent wildlife event, a rare double emergence of periodical cicadas. According to heat maps, Uncle Frank is ground zero for this fresh slice of hell, so I'll be keeping you guys up to date on the matter. Now, I know you guys must have enjoyed these headlines as much as I did. In fact, I think it was the main reason we closed up on options expiration Friday after the suspiciously timed hatchet job did to AMC by Wedbush, with their price target cut that made no sense but seemed only introduced to control AMC's stock price, which was up 20% over the past 5 days. From CBS, Trump media tells NASDAQ short sellers may be using potential market manipulation in DJT shares. Trump media says traders might be illegally short selling the stock. Trump media tells shareholders how to block their DJT stock being loaned to short sellers. Trump media CEO decries naked short selling. Citadel fires back, stock rises. And then Ken Griffin's Citadel rips Truth Social exec Devin Nunes in short-selling feud. Oh, that's rich. Guys, we have to review this article from Friday night from the New York Post. Ken Griffin's Citadel rips Truth Social exec Devin Nunes in short-selling feud. Ken Griffin's Citadel Securities lambasted Devin Nunes, the CEO of Truth Social's parent company, as a proverbial loser after the former Republican congressman blamed Wall Street market makers for Trump media's tanking stock price. The war of words was triggered by a letter Nunes sent to the NASDAQ stock market on Thursday, in which he accused Citadel Securities and others of engaging in market manipulation, specifically naked short selling. Griffin, a major Republican donor who gave money to Nunes in 2021, unloaded on the former lawmaker in denying any wrongdoing on Friday. Devin Nunes is the proverbial loser who tries to blame naked short selling for his falling stock price, a Citadel Securities spokesperson told the Post. Nunes is exactly the type of person Donald Trump would have fired on The Apprentice. If he worked for Citadel Securities, we would fire him, as ability and integrity are at the center of everything we do. Citadel Securities, a corporate behemoth that has been fined and censured for an incredibly wide range of offenses, including issues related to naked short selling, and is world famous for screwing over everyday retail investors at the behest of other corporations, is the last company on earth that should lecture anyone on integrity, a spokesperson told the Post. In Nunes' letter to NASDAQ CEO Adena Friedman, he wrote that traders had significant financial incentive to lend non-existent shares to short sellers because of the high premiums they were able to charge. Data made available to us indicate that just 4 market participants have been responsible for over 60% of the extraordinary volume of DJT shares traded: Citadel Securities, Virtu, G1 Execution, and Jane Street Capital, Nunes wrote. Nunes asked NASDAQ to have the brokers reveal their short positions. Virtu declined to comment. G1 Execution Services could not be reached. While investors have been trying to short Trump Media, there are very few shares of the company available for trading, which makes it expensive to borrow shares. Griffin, meanwhile, is no fan of the presumptive Republican nominee who owns a 60% stake in TMTG. He urged the Republican Party to ditch Trump in favor of Florida Governor Ron DeSantis and former UN Ambassador Nikki Haley. Both were trounced by Trump in the primaries. During a recent conference, Griffin said that Trump was good for our capital markets, predicting that the former president will defeat incumbent Joe Biden this November. In 2021, Nunes left Congress to head up Trump Media and Technology Group, which was a private company at the time. 3 months before he stepped down, Griffin had donated $5,800 to his campaign, records show. TMTG merged with a blank check company, Digital World Acquisition Corp., or DWAC, making the firm's stock available for trading on the NASDAQ. Guys, I want you to know that any press that shoves the market makers, the short sellers, predatory short hedge funds into the limelight is wonderful for us. Let's hope this kind of thing continues. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.